I am picking up on page 349 of the Truth in Lending Act, and this is within the reference guide to regulatory compliance, the last piece that I have to finish for subpart 2, credit. Not going to finish it all in this recording, but got another 120 pages. Where I left off, we were talking about the comparison table, which presumably is part of the closing disclosure. In a separate table, the credit must disclose the statement, use these measures to compare this loan with other loans, and include the following, 1 through 4. And I actually take back that last comment. I remember actually leaving off on the loan estimate, and that's what this this part of the regulation is referring to. In fact, it's also referring to TRID loan estimate, not your previous GFE. Once again, in a separate table, the credit must disclose the statement, use these measures to compare this loan with other loans, and include the following, 1 through 4. The total principal, interest, mortgage, insurance, and loan costs scheduled to be paid through the first 5 years of the loan term, labeled, you will have paid in principal, interest, mortgage, insurance, and loan costs. So total, you will have paid in principal, interest, mortgage, insurance, and loan costs. 2. The principal scheduled to be paid through the end of the 60th month after the first periodic payment, labeled principal, you will have paid off. 3rd, the APR labeled your costs over the loan term expressed as a rate. This is not your interest rate. And 4th, total amount of interest the consumer will pay over the life of the loan expressed as a percentage of the loan amount. Additional information, including these things need to be part of the loan estimate. Information on the appraisal, including the fact that the creditor may order an appraisal and charge the consumer for it, and that the consumer will receive a copy of the appraisal, and the consumer may choose to pay for a second appraisal. And 2, a statement of whether a subsequent purchaser of the property may be permitted to assume the loan obligation on the original terms. And 3rd, a statement that the homeowner's insurance is required on the property and consumer may choose the insurance provider. 4th, a statement detailing any late charge stated as a dollar amount or percentage of the loan late payment amount and the number of days that a payment may be late to trigger the fee. 5th, 6th, 7th. 5th, the statement regarding refinancing as follows. Refinancing this loan will depend on your future financial situation, the property value, and market conditions. You may not be able to refinance this loan. 6th, a statement of whether the creditor intends to service the loan or transfer the loan to another servicer. And 7, if the loan is a refinance, a statement that state law protections against liability for any deficiency after foreclosure may be lost. The consequences for losing these protections, and the consumer should consult an attorney for additional information. A signature of the consumers may be required by the creditor. A disclosure on the loan estimate that the consumer does not have to accept the loan because he had signed or received this disclosure. And other requirements on the loan estimate, 1 through 5. 1. All amounts must be rounded to the nearest whole dollar except for per diem amounts and payment amounts. 2. Percentage amounts may not be rounded and must be disclosed up to 2 or 3 decimal places. 3. When the word month is used, the creditor must substitute the appropriate term to reflect the unit on other than monthly periods. 4th, the term may be translated into languages other than English. And 5th, the loan may attach a business card in place of creditor and loan officer information. Subpart E, content of closing disclosures on mortgage loans. This is covered in Title 12 of the Code of Federal Regulations under Chapter 1026.38. 1. The title must be closing disclosure. 2. The statement of purpose is as follows. This form is a statement of final loan terms and closing costs. Compare this document with your loan estimate. 3rd, closing information to include 1 through 6. 1. The date the disclosures are delivered. The date of consummation, closing date. The date the amounts due from the consumer and the seller are expected to be paid. The name of the settlement agent. The address or location of the property. And in transactions with the seller, the sale price. In transactions with no seller, the appraised value of the property. 4th, transaction information to include the borrower name and address, if applicable, the seller's name and address, and the name of the creditor making the disclosures. Loan information to include the loan term to maturity, the loan purpose, which is purchase, refinance, construction, home equity. 3rd, the type of loan product, adjustable rate, step rate, and fixed rate. And D, the loan type, conventional, FHA, or VA, or other. E, the loan identification number. F, the case number for the mortgage insurance policy, if any. G, the loan term. H, purpose, to include the purpose for the loan using one of the following terms: purchase, refinance, construction, or home equity loan. I, the product information as follows: adjustable rate, step rate, or fixed rate. J, the loan type, including conventional, whether it is FHA, VA, or other. If other is used, the creditor must provide a brief description of the loan type. K, the loan identification number. L, the case number for any mortgage insurance policy. M, a separate table of loan terms, including loan amount, interest rate, fully indexed if an ARM, principal and interest payment, prepayment penalty. If the answer is yes, then the maximum amount of the penalty that can be imposed and the period during which it can be imposed. 5, balloon payment. If the answer is yes, the maximum amount of the balloon payment and the date. 6, a table of projected payments with the following information, A through I. A, itemization of each separate periodic payment or range of payments with an estimate of taxes, insurance, and assessments, and the payments to be made from the escrow accounts. B, if the loan has the following features, then disclosures of separate periodic payments or ranges are required. 1 through 4. 1, the periodic principal and interest payments may change. 2, a scheduled balloon payment will occur. 3, the creditor must automatically terminate mortgage insurance. And 4, an anniversary of the due date of the initial periodic payment. C, only 3 sets of payments may be disclosed in this table, not counting a balloon payment that is a final payment. Payment changes resulting from the cancellation of mortgage insurance. Each separate periodic payment or range disclosed in the table must be itemized as principal and interest. Minimum and maximum payments must be determined using the maximum and minimum rates. E, payments for mortgage insurance must be labeled mortgage insurance. F, amounts paid into escrow must be labeled escrow. G, the total payment must be labeled total monthly payment. H, subheadings must be used to indicate the number of years during which the payment or range of payments apply. I, a final balloon payment must be labeled final payment. Final dash payment. 7, taxes. Oh my gosh, I just skipped a lot of pages. I hate when I do that. Let's check time here. Got another 6 minutes. We were under number F, right? I don't even remember. Shoot, I just did it again. Let me Let's not restart. Let's just find it. Okay, taxes. 7, taxes. Based on an improved property value, insurance and other assessments must be labeled as such and expressed as a monthly amount with a statement that they may increase over time and that the consumer must pay separately any amounts not paid by the creditor. 8. Estimated escrow payments for loans subject to RESPA must be disclosed using the escrow account analysis described in Reg X. 9. Estimated escrow payments on non-RESPA transaction may be determined in the same manner as RESPA loans. And 10. Costs at closing table labeled closing costs. A, B, and C. A. The total loan costs including origination costs, costs the borrower shopped for, and costs the borrower did not shop for. B. The total of other costs including taxes, insurance, prepaids, and escrow accounts. C. Cash to close including a statement that the total of the following amount includes the closing costs, the sum of closing costs including costs paid before closing and the closing costs that are financed, the down payment or funds from the borrower, the deposit, the funds to the borrower, the selling points, and any other adjustments. 11. An alternative table, cash for closing for transactions without a seller, including A, B, C. A. The amount due to or from the consumer. B. A statement stating whether the amount is due to or from the consumer. And C. A statement referring the consumer to the cash to close table. 12. Alternative calculation for cash to close for transactions without a seller. For transactions without a seller where the creditor used the alternative table, the creditor must disclose in a table titled Calculating Cash to Close this statement. Use this table to see what has changed from your loan estimate. The following: loan amount, the final amount. 1 through 3. 1. The loan amount estimate disclosed on the early disclosure. 2. A prominent disclosed question, did this change? And 3. If the amounts are different, a statement that the fact and of that fact and a statement of whether the amount increased or decreased, or if the amounts are equal, a statement of that fact. I'm not going to read that over and over again because, this whole section was covered in RESPA already, hence the simplification or the, convergence of RESPA and TILA, but do remember those 3 points because I'm going to skip them as we go through the comparison table. The total closing costs titled total closing costs 1 through 7. 1. The amount of closing costs ascribed in the early loan estimate. 2. The final amount of borrower paid closing costs and whether it changed and what changed. If the amounts are different, a statement of the fact, and if the difference is attributable to differences in itemized charges, a statement that the consumer should see the total loan costs and the total of other costs disclosed to determine if the increase exceeds the limitations on increase in closing costs. 5th, if there is an excess over the legal limitations on increases, a statement that the increase exceeds the legal limit by the dollar amount and the excess, and if any refund is provided, a statement directing the consumer to the required disclosure, and if the amounts are equal, a statement of that fact. So you have closing costs paid before closing, total payoffs and payments, and these are all being treated the same. It should compare to the loan estimate, and we should determine whether it changed or not. Same with cash to close, same with closing costs finance, in parentheses, paid from your loan amount, including the final amount due from or to the consumer calculated as the sum of the loan amount, the final closing costs, the final borrower paid costs before closing, and the final amounts of payoffs and payments that were made to third parties. Closing cost finance, labeled closing cost finance, in parentheses, paid from your loan amount, including the sum of the final loan amount and the final amount of payoffs and payments to third parties, but only to the extent that the sum is greater than 0 and less than and equal to the borrower paid closing costs minus the lender credit. Closing and the loan cost details under the heading Closing Cost Details, with columns designating whether, and this is number 13 under, I guess, Closing Cost Requirements, Column is designating whether the charge was borrower paid at or before closing, seller paid at or before closing, or paid by others, and all loan costs associated with the transaction that include the following information in the appropriate column. To be brief in the essence of time, we're talking about origination charges, itemization of charges that the borrower did not shop for, along with the third party's name, itemization of charges the borrower could shop for, along with the name and the cost, and whether it was paid at or before closing, and whether it was on the creditor supplied list. Total loan costs paid by the borrower. Closing cost details under closing cost details in the appropriate column with the appropriate headings classifying the costs. Taxes and government fees, prepaids itemized by the name of the person ultimately receiving the payment. Recording fees and tax and transfer fees are part of taxes and government fees. Initial escrow payments. Other charges labeled as other and itemized to the person being paid. The word title must appear at the beginning of any title-related charges, and total other costs borrower paid. Closing costs, number 14, closing cost totals labeled closing costs borrower paid in parentheses. Including the sum of the following designating which are borrower paid or seller paid. Descriptions must be consistent with the way charges were disclosed on the loan estimate. And you have charges being listed here that the borrower shopped for, didn't shop for, origination charges, taxes and government fees, prepaid charges, escrow payments, other closing costs, and lender credits, which should be a negative number. Number 15, under closing disclosure requirements, is calculating cash to close. Labeled as such with the statement, use this table to see what has changed from your loan estimate, including the total closing costs disclosed on the loan estimate, the final amount of closing costs disclosed on the loan disclosure, the prominent statement, did this change, and how it changed, if it changed, and if it didn't change, if it didn't change. Closing costs paid before closing, including under the subheading estimate the label closing costs paid before closing, showing final and whether or not it changed. 17, under the subheading estimate, the amount disclosed on the loan estimate and closing cost finance, the final cost and whether or not it changed, down payment or funds to the borrower, and whether or not that changed. 19, the deposit and whether it changed. 20, funds for the borrower and whether it changed. Furthermore, the funds for the borrower will be calculated by subtracting the principal amount of the credit extended, excluding financed closing costs, from the total amount of all existing debt being satisfied. A positive, negative, or $0 amount should be disclosed to the borrower. Seller credits and whether they changed. 22, adjustments and other credits disclosed on the loan estimate and whether they changed. Cash to close, disclosed more prominently than other information, which as it was stated on the loan estimate, and the final cash to close, and the summary of the borrower's transaction. Number 24, include the statement. Use this table to see the summary of your transaction. One table is labeled borrower's transaction and should include the total amount due from the borrower at closing in the following 11, 12, 13, 14, 15 or more items. Number 2, the amount of the contract sales price of the property. 3, the amount of the sales price of any tangible personal property excluded from the sales price. 4, the total amount of closing costs disclosed that were borrower paid. 5, a description and amount of any additional items that the seller has paid but which will be reimbursed by the consumer at closing. 6, the adjustment Oh my god. For prepaid taxes, assessments, or other items paid by the seller and reimbursed by the consumer, labeled specifically, and the time period corresponding to the amount paid. 7. Itemization of amounts already paid by or on behalf of the borrower, including any deposit amount paid to the seller held in trust by attorney or other party for the sale of the property, the loan amount, the amount of any existing loan that the consumer is assuming, or any loan subject to which the consumer is taking title to the property, the seller credit, which is the total amount of money that the seller will provide at closing as a lump sum. Number 12, any other credits with a description of the amount. Number 13, the description of adjustments for item unpaid by seller. 15, a description of the amount of any additional items which have not been paid and which the consumer is expected to pay at closing, but which are attributable to a time period prior to closing. C, the calculation of borrower's transaction, a calculation consisting of the sum of the following, along with a statement that the disclosed amount is due from or to the consumer and the amount due from or to the consumer at closing. You have 1 and 2, the total due from the borrower and the total already paid on behalf of the borrower. And lastly, items paid outside of closing costs, costs that are not paid from the closing costs but would otherwise be disclosed in the closing statement table and should be marked with the phrase paid outside of closing and include the name of the payee. Before I get to number 25, requirement on the closing disclosure, I'm actually going to break. Because I've gone